This is Marketing Uncomplicated. Hi, everybody, and welcome back to the show. I have a very special guest who is also a dear friend of mine, and I'm going to introduce you to her. Tan is the founder of DBA Ventures, former VC operator, and chief of staff advocate. Hi, Tan.
Hi, Sasha.
How are
So
you?
happy to be here with you.
Thanks for taking the time. It is. It's a good day on Friday. How's the weather in Austin? Good?
Good, good, good. It's like 75 and sunny, and everyone's like on their Easter break, so it's
Spring
lively.
fever is around the corner.
hmm
So tell us, what does DBA Ventures stand for?
Sure. So it's my consulting company, and it stands for Doing Business As. So it's a culmination of things, but I'm starting a consultancy and coaching business around coaching chief of staffs. And the reason why I'm choosing that niche is I was previously a chief of staff, obviously operator, VC, and this is a really pivotal role that the industry is adopting. It has adopted it, but I think it needs a bit more coaching and guardrails around it. And so my goal is to support those either wanting to be in the role, who are in the role, who are actually trying to flex out of the role. This is something that a lot of people have decided to take as a career path to either bypass getting an MBA, or an MBA wasn't for them. And it's a clear line to be a general manager, a COO, and sometimes a CEO as well.
Nice. So I bring on Ton today because I want to dive in and get in deep with you, Ton, in regards to the world of VCs. I think it's a black box, obviously, for people who have no idea about it, but I think it's an even further black box for those that are starting a company and want to potentially look to venture out into VCs. And I know that there's a multitude of ways for somebody to go out and get funding. So why don't we break those down first, and then talk about the differentiation between the different types of funds, and then we'll dig into VCs and the process and all that good stuff in terms of, courtship with potential folks that are coming your way and pitching you.
Yeah, yeah. So when you start a business, obviously you have to fund it. So there's the option of self-funding, which either you have reserves to self-fund it, you can get a personal loan, you can take friends and family money, you can take angel money, and then there's obviously the route of VC, which is venture capital money.
An angel being.
It can be somebody of high worth. It can be an uncle who is going to invest in you, who has just reserves to give you, and that's kind of a hobby of his. So he's done well. He wants to support, business owners, and so he's going to write you an angel check. And that's usually coming from an individual and not coming from a fund.
hmm And then, so yes, so that's individual. So you call them angel investors, and then the VCs is coming from a fund. So let's dive into a little bit more about the whole VC world. So let's start baseline.
Sure. VCs are a group of people, or maybe one person who has decided to start funding businesses. And generally, the structure around it is they have what they call as LPs, and it's a network of people who've decided to give a allotment of money to this one person running a VC to then go and invest their money into startups, businesses, um, anything you kind of name it. Yeah, but generally it's
Yeah.
startup businesses.
So, are there particular VCs that are out there that specify in different industries? I know in the past you and I have talked about female funded VCs versus, maybe there's like beauty funded VCs, or just focusing on like tech and all that kind of stuff. Are they truly separated out that way, or is it kind of, whatever is the most interesting? Because I know we talked previously about how buzz is also created around a new product or service that's about to drop. So tell us a little bit more about that.
Yeah, so you can have generalist VCs, which will invest in anything. And then you also have VCs that are bucketed by vertical. So most recently, you have a lot of VCs popping up just specific for AI. You have VCs just for dual use technology, which is something that services the private and public sector, specifically for the government. And you can have female founded and female supported. So it's VCs that are women that are only investing in women. You basically can have kind of a niche in VC. It's really based off of the thesis of the fund. Yeah.
Understood. And then so it behooves somebody, I guess, to do the research to figure out, this is the type of industry I'm in. These are because if you reach out to a VC that probably specializes in the different types of tech or female funded, then you potentially have more of an opportunity to get in through the door, right? Versus just kind of spray and pray and pushing your deck out to a multitude of different VCs. So tell me a little bit about the mindset of somebody starting a business. Where would they go and how would they begin this process?
Sure. Yeah, I mean, you can try both of those methods. I would definitely not, especially in with the way the market is right now, go I would recommend going to a more specialized VC. So, I'm a woman and my product is a consumer packaged good. The chances of you going to just like a journalist fund, you're now fighting for the dollars going into AI, into space, into deep tech. It probably makes the most sense to then go to a VC that has expertise or specializes in what your startup does. On the other end of it, from kind of a strategic side, you then get subject matter expert. So when you are taking money from somebody, it's the exchange of money for equity in your company. They should be helping you grow. And
Yeah.
so you want to make sure that the money that you're taking is beneficial to the growth of your company. So it's not just capital, you're also buying into expertise or you're giving away your company for expertise.
Yeah. That's interesting that you kind of pull out, that there are trends that are happening in the market where it's like you will be overshadowed if you're not doing something within space or AI and so on and so forth. So it is good to focus on the type of VC that you potentially reach out to. So tell me a little bit more about the process. So I know that you were obviously inside working for a VC. What did that look like from the standpoint of pitches that you guys received? What was the day in the life of Tan at your old VC firm?
Sure. So I worked in a VC out of a family office. And so my constraints were a little bit different from a traditional fund, right? So when you're coming from a traditional fund, you have different LPs versus the way I worked was it was just family money, and there were less
And not to
constraints.
interrupt you, but like LPs standing for
Limited partner. So you've
okay.
got the term GP and LP. So you've got a general partner who usually leads a fund, and limited partner is somebody who puts a fraction of the fund, right? So a fund will raise $150 million, and LP will write a check for $1 million, something like that. Um, and so, uh, sorry, I'm kind of losing track, but uh, sorry. What?
LPGPs, and we were talking about getting into the life of like a
Oh
day in the
yeah,
life of Tan. Yeah.
yeah. So the constraints around what I was able to invest in versus like a traditional VC was very different, right? Of course, the ultimate goal is to have returns, but the pressure around having returns is very based on the thesis of the VC. So there are what you would call like deep tech funds. They're not really expecting returns for 5 to 10 years versus there are funds that are called growth led funds or growth stage funds, and these are companies that are a little bit further down the line of like operating. So they're either pre-IPO or they're already producing like a significant amount of capital, like returns and
Mm-hmm.
profit, versus like
Mm-hmm.
seed is an idea on a napkin and there's
Mm-hmm.
no money and they don't know if you're actually going to succeed, but you're taking a bet on this person and their idea. Yeah.
So you would receive how many decks do you think, like in any given month?
I mean, 100, right? I could be
Wow.
receiving like 5 decks a day, 10 decks a day. Yeah, going back to kind of your original question, like what is a traditional day for me? So you're receiving decks. You're also receiving intros from your network for founders. You are networking, you're meeting with founders, you're meeting with other VCs, and this is how you get what you call as deal flow. And
Yeah.
it's potential deals that you'd be investing in. And then anything that's desirable to you, you then would have a second conversation. You would meet with the team, you would meet with the founder, or you would meet with another investor who's already invested in that company to just get a full understanding as to what's going on the inside, where the potential is, and at the end of the day, what is the investing potential? And this is called diligence. You're
Yeah.
making you're understanding like their growth numbers, their team, the founder history. So are they first time founder or have
Mm-hmm.
they built a company before? And then after diligence, you then make a decision basically
Mm-hmm.
if you want to invest in them. And if they have allotment available for you, then there's a negotiation around terms. And
Mm-hmm.
that's just like any other negotiation. So they're raising $10 million. You want to take 5 million of it for a percentage of the company. Are you requiring a board deck? Are you requiring, you can kind of ask for anything. And reversely, the same thing with the founder. They can say,
Mm-hmm.
like, I'm giving X amount of money away or X amount of my company away. These are the things that I want from you.
Yeah. So out of the hundreds of decks that you receive on a monthly basis, even like daily, I mean, it's like, I mean, you're getting cold, and then you're getting network connections dropped on your desk. Obviously, the network connections are a different situation because it's a little bit of hey, I know this person, I've vetted, so on and so forth, versus a cold. But sometimes there could be gems in that pile, right? So out of what you receive maybe from a network and a cold, like what do you think the percentage is that you had actually set up like face to face meetings, or, like, hey, let's just jump on a call, kind of um, figure out what this person is delivering and if there's like a good fit type thing.
I would say it's probably between 10 to 15%.
So not a bad percentage at that point.
Hmm. Yeah. Yeah.
And what do you look for in terms of when somebody actually pitches to you from a cold standpoint? Let's go there because those are the toughest ones. Like I have no idea who you are. I'm sending this. I mean, obviously, I've researched the VC company. I've done my diligence. I know who I'm going to be sending it to, who I'm actually pitching it from a cold standpoint. What is like? Give me an example of like good, bad, and amazing in terms of pitches.
Um, Good as you do the research, right? So you know that I write a specific amounts of checks. You know that you know some of the checks that I've written, the type of companies that I have, and you come to me with a compelling deck that isn't too long, that has kind of all the metrics that you're looking for, which is like growth metrics, background of the team, um, what they call as TAM, which is total addressable market. And I was investing in seed, so all of this is very important versus like if you're investing in like Series B, Series C at all, it's already there for you. Like
Mm-hmm.
there's a track record already. Yeah. So that's good. I would say like medium is like what you have that's good, but like just maybe not in depth.
Yeah.
And it's really about the intro. I mean, at the end of the day, if I'm not getting an intro from somebody that I know, or I'm going after you because I think that your company is compelling, how are you reeling me in, right? Like in the sea of the hundreds of decks that I'm getting, what about your company is special? And that's
Yeah.
pulling me away from all these other promising pitches that I'm getting. Bad would be like you hit me up on LinkedIn, it's like, hey, like I have a startup, like here's my deck. It's like that is like I think a really, really bad approach, right?
Yeah. Yeah.
Yeah.
Wow. So I think somebody in the starter world would probably think like LinkedIn would be the place to be. But so that's really good. That's really good feedback to hear. And I'm assuming also based on like the events that you attend and go to, people have approached you at those situations and handed you decks, or they're like maybe a USB, hey, check out what I'm doing, or has that ever happened to you from a face-to-face standpoint?
Um, I think physical decks are kind of few and far between, but it's more or less like Telegram is really big, so is Signal, and so
Those are the communication apps, right? Yep.
communication apps, and they all have these like community features, and so a lot of times people are like passing them through these features, which great. It gets to me in speed, but it's lost in a lot of other stuff, right?
Yeah.
It's lost in my introduction of two investors that I just met with 2 minutes ago. It's lost with a founder that's trying to introduce me to his team. Yeah.
So tell me a little bit about then of like the security. If I have this like amazing idea, let's say it's the beginning of seed, back of the napkin like concept or idea, and I'm shooting it over through like Telegram. Like how am I taking the chance in terms of not protecting myself and somebody could basically jack that idea and run with it? Or where's the protection based on that? What do I have to do to make sure that that doesn't happen?
I think it's really qualifying the way that you're getting in touch with that
Hmm.
investor, right? So
Yeah.
like you said spray and play kind of thing. It's like you kind of don't care who has
Yeah.
a hold of it, which is totally fine. Like it's some of it's a little bit of a numbers game, but if you're really trying to protect your technology and whatever your differentiator
Hmm.
of the business, then it's really understanding and strategizing a way to get a hold of the VC that is protected.
Yeah.
I would just recommend probably by way of somebody like someone who can validate you.
Yeah. Have you and were you guys ever in a situation where you guys were going after and pitching to bring somebody on? Like it was like one of these like an Uber type thing, not to say that maybe your ex VC fund didn't invest in those type of things, but was there something that was really picking up traction and your company jumped in to bid? Like tell us a little bit about, because that's now going on the opposite side of you bidding to get that person in because they've built up this hype, so to say, as we've talked about before. And what did that look like for you guys?
Yeah, so it's been about like 18 months since I've taken a step back from the VC industry, but previous to that, I was involved in like the huge crypto boom between like 2020 and 2022. And with that, or I guess 2021 to 2023, in that time, we were chasing deals, right? So
Mhm.
you see a promising technology, you see a promising founder, or you see someone building something faster than what's out there. Essentially at the end of the day, it's innovation. And so you are trying to get in front of those founders. And that was a really, really interesting time to invest because historically, like, because we are holding the capital, we have the kind of pick of the litter. But in that case, it was like one person had this innovation, one person had this technology, one person had this um, idea,
Yeah.
and they were able to say, like, I can now pick who I want to take money from.
Yeah.
Um, I mean, I actually loved seeing that. I loved seeing like the founders being really protective of their company and who they were allowing to have a piece of it.
Yeah.
Yeah. And I
So it
would say
was
like the AI boom's probably going through the same thing right now.
Yeah, so it was more so versus them approaching you, not necessarily from like a desperation, but the tone obviously changes when investors come to them and when VC funds come to them.
Yeah.
So, an actual fact for them to boil down, I mean, there could be so many variables, but does it boil down to like what you highlighted on a little ago in terms of like the terms and stuff and like who's offering the best terms and maybe who's going to give me the most for maybe taking like the littlest percentage or maybe not, right? I mean, what do you think it truly boils down to and what's that mix?
It varies, but I think it boils down to returns,
Mm-hmm.
right? So if you want to get into a company and they're only offering you to get like $10,000 of the $10 million that they have, they're going to raise. If you think the return's going to be 10, 20, 30, 40, 50x, great, take it, right? But if you really think that the company isn't going to grow exponentially, like it may be better to just forego taking shitty terms, right? And
Yeah.
so when I referred to kind of the crypto boom, we were taking somewhat undesirable terms because you wanted to get in because the growth potential was there.
Mm-hmm.
In this case, like the capital allocators have the upper hand, so we're able to say like, yeah, no, like we want very specific terms like pro rata or first of right refusal, those types of things that we actually didn't have a couple years ago.
Yeah. So what do you think then is different between the crypto boom versus what's happening now with AI? Like, what do you, because I mean, you were so involved within that time frame. I'm curious to hear, and it almost feels like for somebody who's not like is looking at it from the outside in, that it was like this just this huge kind of like boom, and then it's kind of deflated, and now AI is like taking off. Do we feel like that's going to deflate, or does it have more longevity than crypto does? Like, I think crypto was booming and building, and then all of a sudden in 2020, end of 2022, 2023, it really started to pick up, and it had like a stronger hold that we felt that it was going to carry through. But then, it's the financial industry. It's always very tricky. And I think AI obviously is very different. You can't compare. But I'd love to hear your thoughts on the two in terms of, the trends that are happening, and, if you see that AI is probably going to have a longer kind of stickiness in terms of hanging around.
I think AI definitely has a little bit more stickiness. And I
Yeah.
think it has to do, crypto was interesting. It was, it had gone through two other winters before. So people made a lot of money really, really quickly. And then people lost money really, really, really quickly there. I think the deflation, how you referred to it, was around regulation. Things were getting regulated, it was getting tighter just because there's just nefarious people and acts,
Hmm.
and obviously like FTX and Three Arrows Capital. Those are the type of people and occurrences that um, put a bad name to an industry. I think what I was seeing was everyone's kind of making a use case for crypto or NFTs or blockchain. And I still think there's a lot of use case there, but in the case of AI, I think there's more of a use case in that case in the industry right now, right? You can AI many, 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 many things versus blockchain
Yeah.
technology. It's not limited, but the only way that the industry or the population can really think about it right now is in terms of finances. It extends
Hmm.
beyond that, but the technology is it's quite complicated, and so is AI. But I think AI can just be better explained and understood.
Hmm. Hmm. Fair. That's really interesting to kind of unpack there because, yeah, I mean, to your point, AI can be utilized in so many different avenues and streams. And I mean, the world is your oyster in terms of what you can attach AI to make it better. But, there's going to be the good and there's going to be the bad. And I don't mean, from a strategic standpoint. I mean, so many people are slapping things onto AI right now, and even in my own industry and marketing, it's wildfire. So yeah, so thanks for jumping into that. But so I want to kind of dig in a little bit more in terms of like the support, and go back a little bit to the decision making factor in terms of who you work with from a VC fund as a business founder. And for me, I think it's a little interesting, and I want to hear more in terms of the process. I get X amount from the VC fund. Do you guys then support me from a standpoint of okay, we're going to hook you up with an HR person who's going to help you find, XYZ. What is the toolbox, if you will, that is unpacked once I begin working with the VC fund? The funds are handed over to me. So I at least know where to spend the money and to make the most out of it. So it's not like I run with it and figure it out on my own.
Yeah, I mean, it depends on the VC, right? A lot of them are really hands off, so they give you the
Mm-hmm.
check and they kind of see how it goes. There are some that are pretty hands on where they are providing you with a lot of resources. Um, it depends on the VC. I'm in the world where I believe capital isn't supposed to be the place where it stops, right? I think
Yeah.
at the end of the day, you're buying into a network or you are giving your company away for capital, but it's also network effect. There's a book that I really love. It's called The Power Law. It's all
Mm-hmm.
about VC and how powerful the network is around when you take money from the right VCs, then it provides like kind of buzz around you, and then now you're getting intros to other VCs, or if somebody is a fan of that VC, now you're attracting talent because that's an indicator of a promising startup. I
Yeah.
would say in the VC, it's called platform, and it's pretty much everything post investment to help your company grow, whether it's talent management or recruiting, or sorry, talent acquisition or
Mm-hmm.
recruiting. It's introductions to companies that could use the tool that you're building. It's somebody who's providing coaching for your CEOs or COOs. It's, um, the help in which a VC can give you ranges tremendously. And anyone who's looking to take VC money, I would recommend that they ask, like, okay,
Mm-hmm.
I'm taking your money, but what other value add can you provide my
Provide.
startup?
Mm-hmm. Mm-hmm. What would make a founder, I mean, in your mindset, if I am somebody listening to this podcast today who, has an idea, or I'm a year in and I'm thinking I should probably at this point start raising. Um, what is your pros and cons about working with VCs?
I mean, at the end of the day, you're giving a piece of your company away, right? I think when you take a bank loan, you're taking a loan plus all the interest, but you technically aren't giving your company away. Angel investing, you're giving your company away, but it's just it's in a little bit of a different environment. So I would say that's probably the cons, right? It's like you're giving away your company with no promise of like actual support. And
Mm-hmm.
just make sure you know who you're getting into bed with, right?
Yeah.
Um, and I think the pros, depending on the VCs, is the support. I mean, I wouldn't say notoriety, but it's if you are invested in by an Andreessen or a Sequoia, you can put that out in the market, and that's just instant credibility and validation.
Mm-hmm. You
Yeah.
bring up an interesting point about um oh my gosh, I was forgetting here. What did you just talk about in terms of credibility? Oh my gosh, I wanted to ask you. I'm completely blanking. You talked about, oh yes, I know. I'll delete that section out where I had a brain fog. But you talked a little bit about what VCs can provide, like, the ones that are hands on versus the ones that are hands off. And it's kind of like, taking the ones that are hands off and it's like, here's your investment, best of luck. Do you think that that's a gap within the VC world that's missing right now to really be able to support a company and from initiation all the way through launch and beyond?
No, I don't think it's a gap because I think you have these things called accelerators. So the
Hmm.
one that's really people know is Y Combinator. So Y Combinator takes you in as an accelerator, takes 20% of your company and provides you all of those resources. And so in that situation, I think it'd be worth it to give your company 20% of your company away because if you don't have those resources, the chances your company is going to survive is quite low, right?
Yeah.
And so um I think I just will go back and double click. It's like not all money is made equal, right? $10
Hmm.
million or 10,000, even $10,000 from a a VC that will just give you the money versus one that will give you the money and then introduce you to your next client that will then grow your company or grow your sales is completely different.
Now, you say something interesting about, you know, yeah, I'm in complete agree with you. It's investment versus non-investment, right? But at the end of the day, um, it's also in regards to, as you talk about, like who you choose to work with. And then you mentioned Y Combinator. Is that an extra 20% on top of what the VC is taking too? So it's like VC takes 20, or I mean, we're talking semantics here in terms of percentage, but the VC obviously will take X percent from your company, and then the Y Combinator does as well. So that's additional on top of, or
So
do they
generally,
partner
when you
with?
enter Y Combinator, it's just an idea. So you
Okay,
don't have VCs. So you enter the accelerator to then grow your business enough to then go out and raise. So they have
got it.
these things called
Okay,
demo days where you are presented your idea and your company in front of hundreds of VCs. And
yeah,
so just in that, it's worth giving your company away because it then you skip over this whole like pitching, cold pitching, right?
yeah,
Because
yeah.
VCs, like very, very good VCs, are dying to get in on that demo day because Y Combinator already does a vetting process around what this person's building
Got
and
it. Got it.
then helps them build it and then gives them the demo day to be prepared, prepares them for the demo day to
Yeah,
then talk to other VCs to then be invested in.
that's fantastic. So you could either jump into the Y Combinator, accelerate your business, or you could be somebody maybe that got seed capital or had capital work from wherever, started your business, and then go to VC versus doing the accelerator process. So you could have a choice to do either or, right?
Yeah,
And
yeah.
then
And
you
the
could
other
have a choice. Sorry, go ahead.
Yeah, the other thing is you have to get into an accelerator. Not anyone can just apply.
Okay.
You can have an idea, but the accelerator has to see potential enough for them to
Have
give
value.
you. Yeah, exactly.
Yeah. What do you think that percentage is? I mean, I'm sure they're getting a crap ton of decks that are flowing their their direction. I mean, is it
Oh
it's
my God.
it's crazy,
Yeah,
right? Like
probably
super
like
excruciating.
I think it's like less than 5%.
Wow, that's wild.
Yeah.
Very interesting. Um, so coming off of the heels of this world that we've unpacked, which I think is kind of great. I mean, give me one of the best case studies that you had in terms of whether it was a company that you guys were chasing after, or whether it was a pitch, maybe albeit cold, or a referral that just was one of the that was almost like, wow, this was an incredible decision and I brought that in type thing.
Yeah, so I mean, it's a network, right? So
Yeah.
I had a friend of mine whose partner was part of Y Combinator and he built a business and I wasn't able to obviously invest in that business, but he had a network of founders. And I would say like the best way to find great founders is through other founders. And I was able to invest in this amazing and fast-growing space news startup called
Mm-hmm.
Payload. So proud of the guys over there, Mo and Ari.
Mm-hmm.
And they then brought me, so I'm proud of that. They were addressing something that was not happening in the market, right? No one was really reporting on space news in the way that we were reading, like um the skim and the hustle, right? Like
Mm-hmm.
there was a change in how people were reporting and journaling. And
Mm-hmm.
so I was able to invest in their seed, but they also brought me a founder who was in the space industry, and she was addressing logistical issues.
Mm-hmm.
Spoiler alert, I wasn't able to actually invest because she had so many people wanting to invest in her company, and she was addressing something that was actually real. And I
Yeah.
say this is a really good case study because one, the network effect of founders. Two, you don't always get what you want as a VC,
Yeah.
right? And three, I mean, to this day, I'm like tracking um her progress, and it's like amazing, right? She's one, a woman in the space industry. Two, she was working, she was a Harvard business grad, and that's not really like a qualification that I really care about, but a lot of people are like, "Oh, well, they're from Harvard, they're from Wharton," but
Yeah.
um she she was just addressing something that was a real world issue, which
Yeah.
is logistics and tracking the parts in building items in space, whether it's like satellites or rockets. And that happens in every other industry. So when I think about her technology, if she does it right, then she can multiply that and apply it to the airline industry. She can sell it back to the government where they're tracking um, uh, like the building of like firearms, right?
Yeah.
I
Yeah.
hesitate firearms, but like
Yeah. Yeah.
their return on that
Was
and
insane.
what she's addressing is amazing. So I think
Yeah.
that whole case study of like how I got to her, how I wasn't able to invest in her, that's a really good case study of like how VC works. It's like I know somebody who's a successful founder who introduced me to somebody who was a potential successful founder that I was able to then introduce me to somebody who I wasn't able to get into but saw, and I'm still seeing her grow.
Growth. Yeah.
Yeah.
Amazing. But you guys obviously had a conversation in the beginning, correct? So
Yeah.
you had
Yeah.
some
Yeah.
of a little bit of a touch in the beginning.
Yeah, I mean, if I really want to be honest, I was being a bit of a stubborn investor in the
Yeah.
terms,
Yeah.
and she was like, I'm not going to take the money. And I was like,
Yeah.
yeah,
Yeah.
I was like,
Yeah.
fuck.
Yeah. We can curse.
Yeah, I mean, I was just like, God damn it. And I really wanted to support a woman in a male dominated industry.
Yeah.
It was, yeah, to this day. But like, that's also VC. It's like, it's very much a courting game. It's a dating game. I don't want to say a likeness game, but like, it's very true. Like, you just do business with people you like
Yeah,
and
totally.
continue to do business with people you like.
Yeah, just like as you say, it's courting and it's dating. You date people who you like. I hope you're not continuing to date people that you don't like, or you could be married to people that you don't like. But
Yeah, yeah,
yeah,
yeah. And you know what? Like to extend that, like these relationships sometimes sour. Like think
yeah,
about like Newman and WeWork and his involvement with SoftBank. Like
yeah.
it's kind of, these things sour just like relationships.
Yeah, totally, totally. I just want to take a step back, where we talked a little bit about, okay, so it's like I get one VC invested in me, and then you said that, it's the network that, you can get introduced to other VCs and so on and so forth. So any given company can have a multiple kind of stream of investments from different VCs, or it depends on the terms, again, going back to that.
Yeah. So I'm a startup. I want to raise $10 million. The chances are is you want to take multiple checks from multiple people, but not like it maybe behoove you to take $10 $1 million checks
Hmm.
instead of taking you know, like
One
a
$30
lot
million
of like
check.
$10,000 checks, right? And then
Yeah.
it all at the same time, it's like you don't want somebody to just write two $5 million checks. Like you want to
Yeah.
diversify who you have exposed to your company.
And that helps how? From diversifying? Just
Um,
from awareness, growth, or all
all the
the above?
above, right? Like
Yeah.
it's kind of like you don't want one person to basically dictate your cap table, which
Yeah.
is yeah, because that means they're taking a large portion of your company. So it's a little bit of checks and balances. It's also strategically you
Mm-hmm.
want to take checks from people who are filling gaps in your company. So like
Yeah.
if one VC is really good at can help you like place engineers and they have access to engineering talent, then you should probably have somebody who has a VC that's really good at like growing companies operationally.
Yeah. And do
Yeah.
these people eventually then become part of your board? Like, can they, or is it like strictly VC investors should not be part of the board?
Depends on the terms,
Yeah.
like a lot of VCs require a board seat.
Yeah.
You can also have some of your VCs as advisors or they call them board observers as well.
Mm-hmm. Mm-hmm.
Yeah.
Yeah. Well, that's amazing. Ton, this has been very eye-opening. I think it's a huge black box for people who don't necessarily understand it. And, I mean, obviously, whether you are kind of, third, fourth degree disconnect or connected to the VC world, like you hear about it, but you don't really get into it because there isn't a need. So I think that this is going to be really helpful for any of the listeners out there thinking like, should I not? Before we end, can you give anybody listening to this advice as to what, like, should I or should I not? What is your sort of maybe top two biggest advices that you can give to people
Who are looking to take VC money or
or not?
or
Yeah. So it's like they're teetering on it or so that, and then where are they in the business to actually start to begin to reach out?
yeah, so in terms of reaching out, make sure that you have a solid business case, that you have data around the business case, and if you have traction, a very clear, concise way of showing that traction.
Mm-hmm.
Um, and I would say those debating taking VC money or not, if you have all those things that I just listed, right? Like you have an idea in which you have all that information, traction, a team, um, a sound idea, go for it,
Yeah.
right? But know that it's a little bit of a numbers game. It's not for the faint of heart. A lot of people are going to say no to you. It requires a lot of resiliency. And then at the end of the day, you kind of have to question like how much of your company you're willing to give away.
Yeah.
Yeah.
Well, not that I want people to bombard you and reach out to you on LinkedIn. As you said, it's not the best place. But again, you've stepped out of VC and you've moved into the chief of staff arena to grow that gap within the market. How can people look to find you and connect with you?
Sure, you can find me on LinkedIn. I think that I've kind of opened the gate back up now that I'm not fully in VC anymore. Um, yeah, I think that's probably the best place. I'm not super on social, not yet, so I think my business should have a social sometime soon. But yeah, LinkedIn's
So
probably the best place.
Thanh Nguyen, spelled ThanHnGuyen, guys, if anybody's looking. And just to make one last comment based on what Thanh said, in terms of thinking about whether to reach out and having your data as a marketer, make sure that your marketers are connecting your data and that you have the tool stack that is delivering that data piece for you guys, because that's crucial, not just for VC, but for everything that you do and understanding how your money is being spent and your return on investment. Thanh, this has been great. I appreciate it. And I
Thank
look forward to
you.
having you on again.
Yes, thank you. Congratulations on the podcast.
Thank you.